Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back, guys. Let's see what we have. On the monthly time frame, we can see that price so far is making higher highs and higher lows. As it stands now, it is forming a higher low here, deep inside the monthly range that we have, mainly the last swing up. Price is already in the discount zone, which means it has retraced more than 50% of the move. From a technical point of view, it's very simple here. We are looking for a higher low or an SFP of this range to keep the monthly structure intact. To keep the uptrend intact, you want to see a higher low form, which can form around the first SR level we had on the left side. When the move is impulsive and price is in the process of forming higher time frame structure, we usually see price move to the next liquidity zone. Liquidity is everywhere, of course, but here we specifically look at internal and external liquidity for this structure-based observation. External liquidity is the extremes, and internal liquidity can be an SR level or what you may call an order block. It's essentially the same thing. Currently, price hit such a level and has now been spending over 2 months inside this range. Based on the monthly structure bias, you first look for a higher low, and if that fails, an SFP of the low where we have an SR level right below it. I have a 4-day order block there, but if you extend the level to the left, you can see it's simply an SR level from previous highs. The order block just helps visualize the SR range in this case. When price breaks out of a range, we can mark it as an SR level. In this case, it's a nice level because a move below the monthly swing low would actually hit this level. If that happens, I first look for an SFP and signs of strength. A sign of strength would be a reclaim of the previous SR level that was lost. That's mainly what I look for after an SFP. First, I always look at the range, then the bigger levels. These are the areas where I look for trades in the first place if my bias remains to the upside. If you come to the conclusion based on your analysis that your bias is up, then you look for a higher low, and worst case, an SFP. On the other side, if we see a break below that level and a close below, then the bearish scenario becomes valid, and there is a high chance price moves lower to test the next range low. It's level to level, range to range, just on higher time frames. As for now, personally, based on the stats and things I don't fully share in the videos, my bias remains up, not based on feelings, but on a system I follow myself, which has worked very well over the years. Unless it stops working, I will keep following it now and in the future. If you want more information, you are of course welcome to join the Telegram via Patreon. Once my bias is clear, I look for signs of strength where I think a level can hold. Then I do my analysis and trade from those levels. I did that on the highs when I traded the move up. Then we took higher low trades. After that, price broke down and I got stopped out on a few trades, but the main TP was hit because price reached the high. When price breaks lower, we then look to the next SR level, which in our case is around 82K to 94K. This is the area where I already had and still have a few longs. The first one was from the low itself, where we had a 4-hour rabbit box set up. I'm also looking for trades on lower time frames. That's the current status. For now, this level is not lost, and price is spending time inside this range. This is where I look for trades. As long as this level holds, it acts as support, and an SFP is allowed. But if we see a close below, then I would aim for the lower level. Until then, I take attempts and setups from this area. The new month is just around the corner, only a few days left, and we will have a new monthly open. I already showed in the last video the potential moves based on averages, but we will look at them once the candle closes. For now, over the next 2 days, what I would not like to see is price closing below this level, which would open the new monthly candle right inside the support again. From there, we will put our levels on the chart and see if there are alignments. To the upside, the first targets are usually the next SR level, which often aligns with a 50% retracement. In our case, it's an SR level from the past. We have a breaker there and a bigger one. That's usually the first level where we see rejection on lower time frames. and higher time frames look very similar. The only difference is that everything takes longer to play out. That's what builds a lot of emotion around these levels. Usually, in the lower part of the range, there is a lot of fear and bearish sentiment, and very often people sell at the lows or tell others to sell, only to see price move up afterward. Fair enough if it's part of the plan and not emotional. But I always ask myself, who is selling here into support? Most of the time, it's fear selling or belief based on their own analysis. If you are in profit and not selling at a loss, that's fine. Do whatever fits your plan. For me, I bought at bear market lows, so I wouldn't even care if price comes to 50K or 40K. I would still be in profit. But for many people who panic sell and FOMO buy highs, then sell here, that's not the best plan. And that's exactly what happened in this range. Many people sold at a loss. All I'm trying to say is, don't panic at the lows of a range. Even if price comes down again, this level is still acting as support. If it doesn't hold, the next level below is well defined. With good size and risk management, that shouldn't be a problem. Looking at momentum, it remains down and would need a close above 170K this month to shift, which is unlikely. So the downward pressure on the monthly remains, and the next momentum number will come with the new monthly open. Now let's switch to the weekly time frame. So what we have here so far is a move up and a move down inside this range, while support is holding. We are approaching the daily cycle low. Well, we already reached it, as we will see on the next chart. But for now, that's the next puzzle piece. Price is at support, as we can clearly see, and we saw a bounce. The weekly low itself is a poor low, which is also clearly visible on the chart. For a major swing low, this does not really look good if this were to remain the final low. Yes, we had cases where such lows stayed as they were, but not many, around 6% if we look at the last 188 weeks. That does not mean price cannot go up. It can, and it can also close positive like it is doing now. But that does not remove the poor low. In this situation, if price rises, I would still look at this level as a point where price can come back to it and finish the business. Preferably, I would like to see this happen already around the weekly open. Meaning, the candle opens, we get a nice wick down, and then a reversal. That would be a nice weekly swing low. So all of this means that as long as price is in this range and we have a poor low or a poor high, these levels remain targets, or at least levels that need to be kept in mind, unless price breaks out and moves significantly away from them. In our case, that would mean a strong pump from here. On the chart, it would look ugly if this weekly candle just makes a straight move back up. I mentioned that yesterday in the Telegram group. After such a move down, price often needs time to build some space before moving back up. That means it could spend this week inside the range, and only the next 1 or 2 weeks would make the move higher. What happens over the next weeks still needs to be seen, especially with a new monthly open coming up. But what is also important is that, for now, it would not look good to just move up while still having a poor weekly low, not only visually but also statistically. I still want to see this level cleaned. Of course, I would like to be wrong and see price just move up. But as it stands now, if this week does not push price above the last high, I don't see a strong reason why we couldn't take this low out one more time. From there, we will see how the candles behave, whether the next week wicks the level and reverses, or maybe makes a deeper move with the new monthly open where it forms the low, or just wicks it and then moves higher. This week is still not over, and the low is not far away. And with that, we come to the weekly stats. So what I'm showing you here are the time and distance stats for this week. We can see that the low was formed in the first days of the week. Based on the stats, if we make a new high after Tuesday, which we already saw yesterday when a new high was formed, this reduces the probability of taking out the weekly low. Right now, we have around an 11% chance to take out the weekly low based on time, and based on distance, it's only about a 24% chance to make a new weekly low. For now, that clearly favors the bullish side. At the same time, we still have the warning I showed before. The weekly low is a poor low. That brings us back to what I explained earlier. Either this week closes green and just ranges, and we don't see a new low this week, as the stats are suggesting, or the low gets cleaned either this week or in the upcoming weeks. Because of that poor low, I can't give these stats full weight. If we had a nice move down, a clean wick, and no warnings here, then this would look much better, and the stats would carry more weight in my analysis. But as it stands now, I would still like to see this weekly low taken out. Now, before we move to the averages for the day and check whether it's possible today based on the averages or not, we will take a look at the cycle indicator. So what we have here is the daily cycle area, where we've been looking for a cycle low to form. In rare cases, this happens while price is grinding up, but more often, price retraces into that time window to form a low. The 66-day mark has now been reached, and we saw a low form and a move up. So the timing is good for a cycle low. All we would need now is a break above the trend line, best case with a structure break and momentum shifting up. That would start to confirm the low. As it stands now, we don't have that. And even if we did get it, I still wouldn't like the fact that it formed a poor low right at a daily cycle low area. The best case would be to fix that low first and then break out, which would mean we would see at least one more low. As you can see, everything needs context. Before the low is confirmed, we can still see price moving lower and grinding along this trend line. At some point, we may see a break, either through a move up or simply through time, like we saw in the bigger range where it was basically just a time break and price went sideways for a while. However, once the low is confirmed, that's the point where we do not want to see a close below it. This can happen after price breaks out and then retests the trend line, or by taking out the low and forming an SFP. In that case, we would be fine and still look for higher prices. It's a similar situation to the weekly cycle low we have on the left side. Yes, price has broken out of the trend and is going sideways, but that doesn't mean it can't retest the weekly cycle low and the trend line. What we don't want to see is a close below, so that's something we will keep tracking. As it stands now, we don't have a break above, and we still have a poor low. Now let's have a look at the FOMC chart. Here we were looking at the reaction before and at or after the event. What we often see is that, on average, we have around 5 bars, plus or minus, of price reaction before the event. That means if price is rising into it, we often see a reversal, and if price is moving down into it, we usually see a retrace at the date itself or after. To be fair, I only found 2 cases where price moved down and the low was formed exactly on the event date. I marked those out on the chart. In those cases, price was retracing. We saw a nice move down and then a reversal right on the date. All other times, it usually happened before or slightly after the event. Now, this event happened yesterday. What we have now is that price was already retracing down and had a reaction before the event, meaning price moved down into it. As you can see, it's a bigger move into the FOMC, not just a small local move inside a short range like many people think. That's not really true. The moves into these events are often bigger and can take time to play out. Before the FOMC, we also had a reaction on the low. A low was formed around 2 to 3 bars before the event, which aligned with our daily cycle low time window, basically the whole retrace into that area. With that said, the target of this move would be at least toward the last high, and generally I would like to see that happen from this area. But here we have to remember the poor weekly low, which makes things a bit more tricky. Technically, I would aim for that high from here. But because of the poor low, I need to ask myself what could happen next. The best case scenario would be to clean that low, form a nice one, and then move higher. That would be ideal. The other scenario is that they actually leave this poor low behind for now. Price moves higher to the target and then comes back to this level later. That would mean this range takes much longer than most people expect. If we get a move up and then down again, that would already mean at least a few more weeks, if not more. So the conclusion is, the best scenario would be cleaning the low before going higher to the target. On the lower time frames, you'll see people saying the move up was fake and that FOMC retraced everything and so on. In reality, the move already started much earlier. What often happens here is that they shake out some people, or in the best case, make a new low, clean the weekly poor low, and then we see the real move. At that point, nobody will talk about the FOMC move anymore, because for them it was just that one day, while ignoring the bigger picture. For me, This is another confluence for reaching that high. Whether we get another low or not, and whether it's shallow or a bigger move, it all belongs to this cycle and FOMC move. One more thing to add. This move would likely happen anyway because of the cycles. The news is just a nice confluence. Most people think the news moves the market, but I don't really care what they say in the news. I'd rather look at the chart and see what's happening before, at, or after the dates. That gives me much more clarity than watching news where people still can't decide which direction it will go. Because most of the time, it's about the bigger picture, not the single day of the event. And the reason I say this is another confluence for the high is because my other strategy also triggered a trade, the rabbit box. So let's have a look at that. Here, I already showed the trades I had. The first one was from the low when price was hitting the higher time frame level and the rabbit box triggered a trade. The second one was where I was looking for a trade around the lunar timing. The next one was also around the lunar timing, as price was coming closer to the SR level where we have a 2-day order block. I had a few small attempts for a long, one failed, one was break even, and then price hit the bigger level and at the same time triggered a trade on the rabbit box. So my entry was at this level here, and after another move down, it hit the compound. That's when I updated that we were coming into an area where we usually see a bounce, and if it fails, then the next level would be way lower. Given the timing, the confluence of pre-FOMC, the lunar cycle, and the daily cycle, and the fact that the next stops were way lower, which at that point had a low probability to be taken out, I also shared that we had around a 94% chance for the previous month's low to hold and not get touched. So for me, it was a compound level, and I updated it in Telegram at the time when I took it. The target of this trade is 95K and higher. That's the other confluence for this high that I was talking about on the FOMC chart. As it stands now, I'm still holding all my trades, spot and leverage, and I don't see a reason to close them at the moment. If price comes lower, I will add to the spot trades and update it in Telegram. For the leverage trade, I was allowing an SFP of this level, which basically happened, and I even added at the SFP level. With that said, if price comes and SFPs the level again, I will look for a trade there while keeping my other trades, most likely adding to the position. Now, something about the December low. It has a low chance to be taken out this month, but next month it still has the chance to get swept. So we will see where this month closes, then put our averages on the chart and see if they align with some level. Or maybe we will already be higher, where we just look for a higher low and continuation up. In the bearish case, bears would like to see a weekly candle closing lower. At that point, they could aim for the low. Until then, I will treat this level as support and remain in my longs, with targets higher. For this setup, at least 95K plus, and for other setups, 112K and higher. Now let's have a quick look at the averages before I wrap it up. Here on the 1-hour time frame, we can see that momentum is up and remains up as long as price stays above 87.5K. That's basically the area where we are right now. Looking at the averages for the day, we can see that the average loss sits exactly at this level. Looking at the daily momentum, we can see that it needs a close above 87.8K. That's basically the same area plus minus. The average loss for today sits exactly at 87.534. So the reason we looked at the averages today was to see if it's possible to hit the weekly low today. Based on the average moves, I can't really aim for that low today. Either price spends more time here and the daily candle closes around this area, and then the next day's average move could maybe shift toward that low, or we get more volatility. In that case, yes, the averages can be broken. But as I always repeat and show, most of the time price moves inside the average levels for the day. That means for today, I can't really expect a move down to the weekly low. If it happens, so be it. But most of the time, price stays within the averages, which means that for today, we could see a low forming here. Whether it provides a bigger bounce or not still needs to be seen. But for now, this is the area for the 12-hour and daily time frame to either hold or lose. Based on that, you can go down to lower time frames and see if a setup is forming or not. Sometimes price hits support, but there is no clean setup, and sometimes even the cleanest setup can turn into a losing trade. So the summary is this. For now, price is still holding a higher low and has not lost the monthly structure. As long as that does not happen, I am still looking for higher lows. Based on the other analysis and tools I explained, this is why I act the way I do. If you want more detail, you can join the Telegram and check it out. With the new monthly candle just around the corner, I am in a waiting mode for the next month, where we will put our new levels on the chart. The daily cycle time window was hit, but we do not have a confirmed low yet. We also have a poor weekly low, which makes this not the best looking low as it stands now, so I would still like to see it taken out. At the same time, I am still in my bigger trades. Based on today's averages, I can't really aim for the weekly low unless more volatility kicks in. If price reaches the average gain level today, I would look to take some profits on the long, best case on a touch of the 4-hour swing high. That's the plan for now. I'll now check if there are some local levels for the Patreons. Until then, I wish you a nice day. Stay safe and see you in the next one.